has to have a hook. In other words, what is a reason that the end user client either has to buy it or really wants to buy it? So for example, it could be something to do with the environment, in which case the EU will need companies to use it. Hi, it's Marcus here, and I've been asked to do a video on what are the criteria when I invest in a business startup. Well, normally I save this for my Gold Fast Track members, but what I'm going to do is I'm going to do a quick video and I'm going to run through around 12 of the criteria that I use in order to invest in a new business startup. The first one is it has to solve a real problem. You see, as business owners, we have to find out what is the problem out there, because people pay you a lot of money to solve their particular problems. So for example, one of the ones that we invested in, actually, people were dying in the street. So this thing in telecones was something which managed to alert people who were working in the motorways or if a car came through a cone. So that's something that we invested in, and it was great, and we made a lot of money out of it when it exited. Number two is, for me, it has to be a repeat business model. In other words, like a vending machine. So you've got a vending machine which runs and runs and runs and makes you money. And then you don't need to have another vending machine. This one keeps making you money. The second vending machine will make you even more money on top. So it's repeat business. Number three, it has to have a hook. In other words, what is a reason that the end user client either has to buy it or really wants to buy it? So for example, it could be something to do with the environment, in which case the EU will need companies to use it, or something like health and safety, so people have to use it. Anything like that is a hook. Now the fourth thing is several products in the pipeline. What I don't want to be investing in is the best idea, but it's just one thing. I would love there to be several products that are going to be coming through the pipeline, so that once everybody's bought the first one, they're going to be buying the second one, the third one, etc. The fifth criteria is, for me, I don't want to be investing in something which is a corner shop or a pub. I don't want something just which is in the city or the country. I want something which is scalable, something on a global scale, which can be sold when I am sleeping, so I'm making money while I am sleeping, so all around the world. Number six, for me, because the risk is so high with these business startups, because most of them fail, quite frankly. They say that you have to buy at least 10 in order to make sure that maybe one of them makes you all the money, 8 do okay, and the others don't do very well. So the risk-reward ratio has to be huge, so it has to make, or be able to make, at least 10 times as much as I am likely to put in, hopefully even more. Number seven, it has to have an attractive valuation. People think that their business is worth a lot to them, but to the investor, I'm taking all the risk. For me, as far as I'm concerned, that money is probably gone. So it has to have a really good valuation. People don't need to be crazy because they always think that their company is worth millions, which it isn't, of course, especially at the beginning. The other thing, and this is number 8, is that the management team, they need to put their time and focus into this. I mean, if I'm investing, I would expect somebody to put 100% of their time in. Why would I be investing in something if they have 5 other businesses? It just doesn't make any sense to me. It's difficult enough running one business. The second thing, and part of that, a kind of team thing, and this is number 9, is that the team need to be invested. Okay, not only their time, but they need to have skin in the game. So they need to put money in the game. Now you can say, well, there's something called sweat equity. Yeah, but when they've got money in, that psychologically, they don't want to walk away from that, and they will do whatever it takes in order to make sure that this thing is going to work. So that is skin in the game. Number 10, it needs to have manageable debt. In other words, I would prefer it if I'm investing in something that it doesn't have any debt, but if it does have debt, I can't have the debt being so big that the repayments of the debt, like the money that I'm putting in is to repay some debt. No. I want my money that's going into a business to be used to grow that business. So I don't want there to be any debt that I'm actually paying off or anything like that. The 11th one is that there has to be some kind of a patent which is either approved or pending, because the last thing that I want to do is to be investing in a company where immediately a competitor is going to come along and do exactly the same thing. Now, patents are expensive, I understand that, but at least it needs to have something where the competition can't just, just because they've got deeper pockets, they can just come along and throw some money at it and they can do exactly the same thing. It doesn't have to be approved, but at least a patent pending. And the final thing that I look for is some kind of a clear exit, something where the people have already thought about how they are forming their company right from the beginning, which structure it's going to be, how they're going to be doing their marketing to attract either venture capital or some kind of private equity or some kind of insurance or debt company or a pension fund or maybe going public. Maybe they want to do an IPO, but anything that they've thought of in advance. And this clearly means that normally the management team have maybe done this before and therefore can show that they've done it once, twice would be even better, 3 times, amazing, and now you get to invest in something which has such a big chance of succeeding because the management done it before, they have a clear exit plan, and there's a good chance for us not just to make our money back, but to make at least 10 times our money. So those were 12 criteria. Now that doesn't necessarily mean that they have to have every single one of these, so it just really depends. There are some there that are absolute musts, and there are others that are like, well, it would be nice if, but if you find something that has every single one of those criteria, and I realize that I've only been talking very kind of peripherally around it, we haven't really gone into much detail, but those are the things that I would be looking for before I invest in a startup business. I'm actually looking almost not to invest. I'm looking for a reason why I don't invest. So if it does all of these things, I am definitely investing. So I hope that was of interest to you, and I hope that what it does is at least give you an idea, because before putting your money into a startup business, please be aware that your money is probably gone. The chances of it succeeding are very, very slim. But if every single one of these criteria is met, or most of these criteria are met, then I have to say you have a good chance of making a lot of money in that new business startup. And I wish you the best of luck in it.